XEQT is an all-equity ETF that provides excellent diversification in addition to their good total returns. So what exactly makes this ETF so good? Fasten your seatbelts, folks. This is going to be a good one. XEQT is the iShares Core Equity ETF, which was designed to be a one-ticket destination for your global equity needs. It is tailored for those seeking growth through an all-equity approach, allocating their assets across Canadian, US, international, and of course those emerging markets. In fact, they are doing all of this while also keeping their management fees pretty darn low. Don't worry, we will break down those fees a little bit later in the video. This ETF will give you exposure to 8,958 companies, which is, well, let's just say it's really good for your diversification. Now, having said that, XEQT does not actually hold any of these companies. Let me explain. They hold 4 ETFs, as well as a small cash position in CAD and USD. Through these ETFs, they can achieve all of that diversification and the exposure to all those companies. So what are the ETFs they hold? They hold the iShares S&P Total US Stock Market ETF. So that one has a ticker of ITOT. This is actually a US ETF, and it does provide 46.99% of their portfolio. They also hold the iShares S&P TSX Capped Composite Index. That one has a ticker of XIC. That does make up 25.22% of their portfolio. Up next, they have the iShares MSCI EAFE Index, so XEF is the ticker. This one does make up 22.61% of that fund. And this ETF, it provides some pretty darn good exposure to Europe, Asia, and Australia. Next, we have the iShares MSCI Emerging Markets IMI Index XEC being their ticker. This one doesn't make up that much, just 4.87% of the fund. But this is the one that provides, well, exposure to those emerging markets from around the world. It actually brings with it 1,500 stocks. ETFs, holding ETFs is becoming more popular, and I can totally see why. It does give you a lot more versatility when it comes to tailoring an ETF to a specific investment goal. In the case of XEQT, it is the global diversification coupled with some, great returns. Speaking of great returns, did you know a sub to the channel is the best way to ensure you're first in line for some future content? The data for this deep dive, it's going to be pulled from their 2024 interim management report that covers up until the end of June 2024. In reading that report, there were a few highlights I wanted to share with you. In the first half of 2024, XEQT achieved a return of 12.10%. And their net assets, those increased from 2.3 billion to 3.9 billion in just, 6 months. Since their inception back in 2019, they have shown consistent growth with notable annual returns such as 19.57% in 2021 and 17.05% in 2023. I have a feeling that this could be a notable year as well. So far, everything looks absolutely pretty darn good. But as always, we still need to check out those fundamentals. Since numbers are involved, we need a hero with a mind sharper than a Fibonacci sequence, a true master of the measurable, the one and only Mr. Math. We will begin, as usual, with a little surface data. So at the time of recording, their current value came in at $33.45, and they had an NAV of $33.56. Those net assets under management, $5.16 billion. If you guys remember from those highlights, they were sitting at $3.9 billion on July 1st. So that's really good. Okay, looking at their beta, it's coming in at 0.99. So they're pretty much in line with the market average when it comes to volatility. Their 30-day average volume, that comes in at 209,238. So they definitely have a pretty healthy volume. Looking at their return on equity, that comes in at 20.37 Return on assets, 7.28%. I have no complaints with this data at all. So let's peel back another layer and let's take a gander into some of those fund specifics. As I mentioned earlier, their inception date, August 7th, 2019. And when it comes to fees, they do have a management fee of 0.18%. That management expense ratio, that comes in at 0.20%. These are really low. And that's part of how they have designed this ETF. They want to give you that international exposure without costing you the bank. Let's take a look at their holdings. Now, we did look earlier at the funds, and we know that they hold 4 ETFs. But if we look at those aggregate underlying holdings, we get that top position being Apple at 2.83%, NVIDIA 2.81%, and Microsoft at 2.52%. Finally, and this is a Canadian one, so this is cool, Royal Bank coming in at 1.71%. Looking at their geographical diversification, the United States makes up the core of this ETF with 46.21%. Canada comes in second at 24.71%. Up next, we get Japan at 5.54%, the United Kingdom at 3.33%, and France at 2.20%. So with that tax breakdown, we get eligible dividends coming in at 33.87%, return of capital 3.90%, but most of this, of course, is going to be foreign income at 62.23%. Okay, I think it's time we actually take a look at their dividends and returns. When it comes to dividends, they have a yield of 1.816%. It's a quarterly dividend of 9.4 cents per share. Well, this quarter. This dividend is actually pretty interesting as it rotates back and forth from a smaller one, such as that 9.4 cents, to a larger one, which is usually around 22.2 cents. Most likely, this is a result of how they are paid from those underlying ETFs. So don't be too concerned when you see this changing around. It will rotate each month. Looking at their actual returns, on the 3-year, their return on investment comes in at 24.39%. Factor in those dividends, we get a total return of 30.49%. Looking at that 1 year, their return on investment comes in at 23.65%. Add in the dividends, we get a total return of 25.87%. These returns are looking much stronger than the last time we checked in with XEQT. I do like what I'm seeing for sure. Okay, I do think we have enough for the final verdict. XEQT does exactly what it is designed to do. It brings solid diversification to the table in a low-risk package. In addition to that, it also delivers on some good-looking total returns. This is a very good blue-chip hold forever foundation ETF. The total return is growth side heavy, but nonetheless, it does still deliver. In my opinion, this is a great ETF for most portfolios. I did say most. The income investor will be one of the few exceptions, as the dividends are not very dominant with this ETF at all. Normally, I would say it could still be a solid part of their foundation, but I do suspect there may be better options with more dividends to better complement an income investor's portfolio. If you are a long-term investor, this ETF could be a great fit for sure. There are some who can argue that this is the only ETF you need. I'm not sold on that, but if there was only one ETF you could own, this would be a good choice. If you are interested in XEQT, well, don't forget to put in a whole heaping helping of due diligence before you place any of your hard-earned money on the table. Let's continue that learning journey by checking out this video on income ETFs. Thank you for watching, and I will see you in the next video.